automated reconciliations to self-learning controls, from AI-driven audit samplings to the conventional financial reporting, Gen AI is rewriting the every grammar of the finance.
And today, in this powerful session titled The Intelligent Ledger, Gen AI and the Future of Finance, we explore how artificial intelligence is not replacing finance professionals but releasing them from routine work to real intelligence. To take us on the topic, The Intelligent Ledger, Gen AI and the Future of Finance, we are privileged to have with us CA Suresh Kumar, RM, Director at Schneider Electric. Please give him a round of applause. We also have CA Shankara Srinivasan Ayathurai, founder and CEO of COOT.
Good afternoon, members and delegates. I'm Tarini, and it is my honor to introduce CA Suresh Kumar Sir, our speaker for this insightful session. CA Suresh Kumar Sir is the CFO and Director, Finance Shared Services at Schneider Electric, where he leads finance operations spanning 11 territories and 40 countries, supported by a global team of over 600 professionals. With more than 2 decades of experience across finance, FP&A, audit, shared services, and global operations, he brings both scale and depth to the finance transformation conversation. His professional journey includes leadership roles at organizations such as IBM, Tyco Fire and Security, and Schneider Electric across India and the Philippines. What truly distinguishes C. Suresh Sir is his strong focus on leveraging technology and generative AI to build future-ready finance organizations. Today's session on Gen AI and the future of finance aligns perfectly with his experience and vision. Please join me in welcoming C. Suresh Kumar Sir.
I am Dheeraj Kumar Jain, SJ, and it's my honor to welcome Mr. C. Sankara Srinivasan, the founder of Coot.Business. Sankara Srinivasan, a chartered accountant by profession, is the founder of Coot.Business, an enterprise sales and GTM advisory firm that helps SaaS companies to accelerate revenue growth through strategic partnerships with system integrators and by selling effectively to global capability centers. As serial entrepreneur, Sankara has built and scaled technological companies across global markets. Prior to Coot, he founded vSense.ai, a retail visual analytics SaaS company focused on customer behavior insights for large enterprise retailers. Under his leadership, vSense.ai grew rapidly through partnerships with global SIs such as TCS, Accenture, Deloitte, and others. He previously founded Reality Compass, a real estate tech startup which was acquired by a unicorn. Before starting Coot, Sankara worked in CEO's office at Tech Mahindra, contributing to strategic initiatives. He has also held key roles at Infosys and Aura Dundee, giving him a strong foundation in enterprise operations, technological services, and large-scale client management. At Coot.Business, Sankara advises some of the India's fastest growing SaaS companies on GTM strategy, SILS programs, and enterprise sales readiness. His firm has supported companies backed up by leading investors such as Lightspeed, Y Combinator, Elevation Capital, and others. He also hosts a SaaS SI partnership podcast where he interviews leaders across the GCC and SI ecosystem to decode emerging trends, collaborations, opportunities, and future ready operating models. He is the podcaster and speaks regularly at events about GCC. Sankara is passionate about enabling the next generation of SaaS founders and revenue leaders with practical, execution focused frameworks for scaling enterprise business. So let's welcome Mr. Sankara Srinivasan.
This is Nishkala. I have the privilege.
Good evening, distinguished speakers and my dear members. So if you open any of the newspaper, including Economic Times or Times of India, that business page. So two common topics that have been covered by all the journalists, all the newspapers are GCC and AI. So today's topic that these two distinguished speakers are going to talk about, one will be talking about the financing models for the GCCs. It may be cost plus model or partner model or JV model, and of course how they have to be aligned for the global standards. And the second speaker, of course, will be talking about the most buzzword, AI, where he'll be talking about how the digital transformation is going to help with this, in the GCCs also. So we have seen a lot of transformation starting from, calculator to the laptop. So we are in that particular point of time where technology is going to be part of each and every services that we are going to provide to our clients as part of practicing chartered accountants or as part of GCCs. So with this brief, I would not like to take much more time. I would like to call upon the first speaker of the session, CA Suresh Kumar. Over to you, sir.
Good evening, everyone. Today I'm going to talk about financing models for GCC setup. Before that, I just like to give the context of our legal entity, how we set up, because this is more connected with this topic. So I'm part of Schneider Electric. It's a French-based company, and I am part of Schneider Electric Private Limited. This is one legal entity where in India we have around 11 legal entities set up in India. All the support functions, be it HR, IT, admin, legal, even the procurement, all these support function, we formed one legal entity called Schneider Electric Private Limited, which covers all the finance, digital, even R&D also, because globally we are supporting R&D services hosted from Bangalore. And we have close to around 9,600 plus employees in this GCC. So I am part of the finance GCC, where again in finance also we have 4 different territories. In India we have 2 territories, which is in Bangalore is one of the biggest, and we have in Jaipur. Again in Jaipur it's a combination of Genpact. It's like some of the activities we outsource to Genpact. This is like all the rule-based activity or more operational activities such as AP related activities, invoice booking, processing, even on the O2C side or order to cash side, the receipt accounting, all those things we have transitioned to Genpact, which is a third-party service provider. And we have one center in China, where China is meant only for China. They are catering China territory, including Japan, Korea, and Taiwan. And we have one territory in Poland, where they are supporting for Central Europe countries, where the most challenging part is they have 20 countries with 17 different languages. So this is the complexity what we have, and you can see from Bangalore we are supporting 11 territories, and from Jaipur they are supporting 13 territories overall. Now, how this is connected with the journey of GCC, just to take you back, now just before 2020, 2023 and all, how the GCC has been evaluated is always they treated as a back office, BPO and other things. And always India or whatever you wanted to consider, they will say labor arbitrage is one of the biggest criteria, and always used to generate efficiency. These are the things that they used to look at for GCCs. But now the current trend, what we can anticipate here is investing in AI is one of the main topic at this moment. And talent upskill also we are doing it. Innovation, automation is one of the main focused area. And also GCC is taking a lot of strategic decisions as well, like digital transformation or something, regulatory compliances, talent acquisition or upskilling the talent, retention of talent, and also working on ESG and other sustainability related goals. Just to see how India GCC evolved, if you see the footprints in India, These are the 6 cities where we have 272 GCCs in Delhi, Mumbai 207, Bangalore 487 is taken the first position in terms of hosting the GCCs. Now there is a big competition with Hyderabad, where we can see more than 273 GCCs already held. So all these 6 cities consist of multiple industries. It is not limited only to finance, right? They have so many industries like tech companies, aerospace, consulting, logistics, legal, many media, pharma, all those industries has been set up their GCC here to support globally. So these 6 cities almost covered 94% of the share in terms of GCC from India. You will be wondering why India has been selected, right? So again, here some statistical information where tier 1, tier 2 cities also considered in terms of cost, infrastructure cost, or the labor cost, or many other factors has been considered. Plus, why again India? As I said, labor arbitrage, that is one of the main focus area. And stretched working hours. So why I'm saying this, stretched working hours, because Indians are great. Always if we ask for work for 10 hours, 12 hours, they're ready to do it. I also worked in Philippines for almost 5 years. They also work similar to us. But to take one example, since we connected closely with the Poland Center also, there is a labor law where you can't work more than 8 to 5. Even if they extend for half an hour, I'll get an email saying, today I got an email saying half an hour extended and all. So very strict, stringent policies are there in Poland and other countries. So in India, we are so lucky enough. So most of the companies, they will think, let's better to move it to India and all. So this is one of the point also we can consider. And talent abundancy, we have all CPA, CMA, CA, CS, so many people, talented people easily available in India where we can explore. And multi-language support, again from Schneider, we are hosted 3 different languages where we are supporting Spanish, Portugal, and Germany. So this is where there is no dependency of language and all. So easily we can deliver the required support to the global client. And moreover, we are also supporting 5 different time zones from our GCC, from finance GCC. So this is also, there is no barrier in terms of delivering timeline and all. So this is also one of the advantages to consider India as one of the GCC center. All this time, GCCs, before investing by the companies, they used to think they wanted to maximize their ROI and all, right? ROI is nothing but return on investment. But now we can also call it as reward on intelligence because of AI is coming into picture, and moreover, all the GCCs driving towards bringing AI and reducing the manual effort, automating the process, accuracy level, they wanted to bring it to 99 plus. So these are the factors we can correlate with the reward on intelligence part. Having said that, now the topic, whatever I'm going to talk about finance models for GCCs, I can talk about the first model is cost plus, or the cost allocation, or a cost recharge model, which is the model we currently use in Schneider. Okay, so here the ownership is like depending upon this the complexity, like some of the tax compliances and all we retain there only in the respective country, and remaining most of the activities we transition to India, and it's been delivered here. So pros and cons, if you see, again, cost is whenever the cost of the talent is uncertain, or you don't have any budgeted cost. In that case, this model really works out well, because whatever the cost you're going to incur, say you are incurring $1 lakh, you just add 10% markup or 15% markup and bill it to your client. In terms of cons, if you see, again, in some circumstances, suppose in Singapore, they are charging $1 lakh and they wanted to outsource to India. And India, if we start charging $120K, in that case, it becomes a negative arbitrage. So this scenario arises, very remotely, but so far we have not come across in this situation. But this is one of the cons in this cost plus allocation area, which I wanted to highlight. And currently for Schneider, we are charging 10% markup for domestic transaction. As I said, we have 11 legal entities here. Plus globally, we are supporting 40 countries. So for all international transactions, we are charging at 15% markup. The next model is activity-based model. Even in a couple of my friends who are working in different GCCs, their model is activity-based. Like in finance, you will have procure to pay, which we call it as P2P, and record to report R2R, and order to cash is O2C. Similarly, we will have intercompany tax and service excellence, master data management, all these things. Take an example, procure to pay. where the moment you will get an invoice from the vendor, you need to account it, you need to do the verification, three-way matching need to be done, PO, GRN, and the invoice or the GRN quantity need to be verified, all those things. So for all these activity, they will charge you, for booking one invoice, they will charge you 100 rupees. Take an example. So this is the model, talks about in terms of activity based. Again here, this is completely activity pointed out charging mechanism. And you will pay for the volume. Suppose if I have 5 lakh invoices per annum, so you will bill it only for the 5 lakh. And again, in terms of employee utilization also, there will be some cons will be there in terms of, suppose if you hire 10 resources and you're using only 8 resources, then you will have a extra, labor cost for the 2 resources. As I said, in India, these are the models also used in some of the industries. Moving on, this is outcome-based pricing where they will give you some kind of a KPI, like payment on time or auto posting. These are the KPIs also it will be assigned. Based on this, if you achieve minimum 90% and above, your pricing will be this much. If it is less than 90 or between 85, some kind of a range, in that case, the pricing will be a little negotiated price will be there. Again, it's like a win-win situation for both the party as well as the GCC provider. And the quality will one of the concern here, because to meet that number, probably there will be a compromise in terms of qualities as well. The next model which I would like to talk about is on the service agreement model, where the parent will hold everything and they will invest everything in the, as a headquarters, they will hold the entire rights of that entity, and they will invest in the local in India. And it's fully controlled by the parent, and this will have a high upfront cost, because at the moment they will have to invest and bring the talent on the set, to have a set right in the process. It takes a lot of time. And this will also, to generate that ROI, it takes longer time than the normal. The next model is joint venture model, where it's shared between the local partner. They will say, I don't want to bring everything at one stretch. So maybe they will hire one GCC locally there, and they will have 50-50 or whatever the ratio is beneficial. Accordingly, they will agree. And there is no need to have a local expertise here. So rather, they will just purely dependent on the other service provider. And governance complexity will be a much complexity, because we are seeing, from Schneider, even though we are a captive entity, answering our stakeholders, internal stakeholders, is also biggest challenge. Then when you are delivering for the external stakeholders, even more biggest challenge you can face it. And profit sharing will also become a bigger topic here. The last model is a virtual captive model, where it's completely owned by third party. Then they will start from the scratch. They will set up the entire GCC center. And finally, one fine day, they will see that, okay, there is a efficiency or some productivity has been achieved. Then they will say, yes, I want to take over the entire GCC, whatever you've been set up. Then they will quote some price and they will take it under their custody. So this is also one of the things. So advantage here is a lower investment, because no need to shell out at the first instance. And the other party will invest and stabilize the process and all. And here the transition risk will be there. The moment they will acquire, you will not get the same resources whom it's been supported earlier and all. And there will be a dependency on the vendor as well. So these are the models are there, which is available in the market. Probably you will get in different names. It need not be the same name. This is as per my understanding, I just plotted. But the current process, what we followed in Schneider is the cost plus markup, where, as I said, for domestic 10%, for international 15% we are charging, which is proved, going on very well, done and dusted. Then, how can we leverage the sustainable GCC? Here, what I can say is adopt the hybrid model, go for both, the combined cost plus and outcome-based model, so that you will have a win-win situation. And always leverage on tier 2 cities, because in terms of infrastructure cost or labor cost, you can optimize. And management trainees, again, you can hire the management trainees, especially for the operational level activities or rule-based activities. You can hire and look for it, and we also do in most of the cases. And mixed resources, we also have combination of 75-25% contract employees, full-time employees, so that as and when we generate efficiencies, we can easily come out from discharging those contract obligations. And invest in digital and automation. Whatever savings you're going to bring in, you can invest more into digital automations, so that will also bring more accuracy and control on the process. And also implement some kind of a governance model, where you should have some SLAs, service level agreements, or the KPIs. so that you can have some discipline in bringing the process in a stable manner. And plan for the scalability, again, have a long-term vision to achieve the strategic goals instead of having a short-term cost savings and all. Yeah, so these are the things, and sorry, that's it from my end. If you have any questions, maybe you can ask.
Yes, sir. Thank you, C.A. Suresh, sir. Now I would like to request C.A. Shankara to take the dais.
Dear members, a small announcement. Tomorrow morning, we will have a breakfast session from 8 o'clock to 9:15. Thank you.
Hi, good evening, everyone. It's always challenging to address in one of the last few sessions with an audience. So I will make it brief. Thanks a lot for the CA Institute as well as for the organizing committee to give this opportunity. A quick introduction as well as what I do so that I can set the context for what I'm going to talk. So I run the company called Coot. We work with various AI products and SaaS products. Primarily, we work with various enterprises, right? We deal with a lot of finance and accounting products, but beyond finance and accounting, we also deal with a lot of, say, AI tools on the data FinOps, hiring automation, and even retail analytics, and so on, right? So as part of our work, we day in, day out deal with various GCCs in understanding their processes and suggesting the right tool for them, right? As we are doing, I think a year ago, I was talking to one of my friends who is a leading finance leader in a GCC. So their board saying that after seeing everywhere saying that AI, they came up with a clear requirement to him, saying that, hey, now we need to embrace AI. It's not just embracing AI and implement few tools, but he need to reduce the finance operations cost, the finance functions cost as a percentage of their sales or the revenue from 1.9% to under 1%. And number two, you need to bring in more cash flow, means increase the sales collection faster, right? And to give a background about the GCC, they are in existence close to multiple decades, and they are operating from more than 110 countries. And the challenge for the board is a real-time visibility, right? So they say that, hey, you should be able to give us a good visibility for us, and even closer, the projection should be closer to what is happening, right? Which in the beginning of that, it is closely around 60%. They say that, hey, it should be far closer to the reality. And also the ESG norm across the globe say, they said, hey, how can you build ESG for the company? So it is an overwhelming task for him. So before he jumped onto the work, so he looked at internally what is there. So he has a fantastic team, right? Capable team, hardworking, and also invested heavily in various technologies. But what was lacking is so many fragmented systems and processes. As I was mentioned, the company is operating in 110 countries, right? They also acquired companies every now and then, across the globe. At least every quarter they will be acquiring companies, be it very large to even a small startup, right? Either for IP or for the talent. And I think some of them work with him in an Excel sheet, right? And you can't even put an enterprise-grade tools for them because it will not be financially viable for them, right? Because they are acquiring a shell company just for their IP or the talent, right? So that is, again, a big challenge. And I think thanks to it, inconsistent data definitions and so on. So probably I will little bit skip fast considering the time. So the first thing what he did is he went to the board and created an alignment, right? Instead of doing just as a cost saving, he said that, hey, the cost saving is not just cost saving, but it's a value creation, right? And the forecasting is not accurate forecasting, but it is because of that, you will be able to apply your capital far more efficiently, right? And the cash flow improvement is going to lead into a working capital gain, which in turn is going to improve your bottom line, right? And the ESG is not a regulatory juggle which you need to do, but it's going to be a brand building exercise. So he changed the narrative from an operating juggle into the strategic value, right? That has really got the eyes of the management, and they say that, yes, go ahead. I think you need whatever the requirement of funding or the support, we will be able to do that. So he created a quick framework in his mind of what he needs to do, right? It is like, he need to keep his people ready, and which I will take a little bit later, and also the process modernization and the data unification and so on. So the first, I think everyone talks about the data, right? Because if whatever, all of you sitting there, I think for any digital transformation or implementation of any AI, you need to fundamentally not have a clean data, which is usable data, right? So he implemented Snowflake, dbt, and Power BI primarily to cleanse all the data. And also across the globe, he was able to standardize the chart of accounts, right? And for having a good projection, the different departments need to talk the same number, right? A single source of truth, be it sales, procurement, finance, right? And all the department needs to do. So that's a integration has to do, right? So with that, probably I will skip again here, right? With the fundamental data in place, he went on to implement few tools, right? I think since it's a large GCC, probably they used a enterprise grade tool, but what is the opportunity available for everyone sitting here, right? With so many nano GCCs as well as SME GCCs are in place, a similar tool, if not an enterprise grade, if you can become a practitioner, it will be an opportunity for you to go and do the digital transformation for the finance department, right? So, for example, he started with reconciliation. I think reconciliation is one of the boring, mundane, and a heavy human effort consumed task. So he used Triantech Cadency, which primarily collated all the data from bank statement to payment gateway and customer reports, everything it able to collate. And using the AI, even with a very less description or even a fuzzy description, it is able to match far more accurately. When the accuracy is very high, and even it also categorizes the customer or vendors in a risk category based on the historical data of volume, how much of discrepancies, and what are the complaints it had in the past. It is able to put in the basket of which are the customers or the vendors in the risk category, and if it is a very low risk category, it automatically reconciles it then. And if it is a very high category, it is able to tell to the relevant audience or their internal team, saying that have a look at it. And as the human looked into it and started putting the entry, it learned, right? By doing this, there's a significant amount of team, especially the consultant team, they were able to reduce, right? It's not an internal team. During the peak of the settlement as well as the big closure, they use a huge amount of consultant team. They're able to reduce it to a substantial level, right? And using that, we all say that majority of the time also goes in answering queries, internal team on finance, taxation, and payment-related queries. Now they use the GenAI to answer majority of their queries, right? Again, I will skip a little fast. As he is working on the cost, right, I think probably only 1 point. I think with that, though he's not able to bring down from 1.9 to the target of 1%, but the trajectory is very clear, right? The more and more of efficiency, and it's not only on the cost, as we mentioned earlier, it is more about the efficiency, and the team is far more agile, right? The response is coming pretty fast, which is the board is seeing the kind of fruits. The same way, cash flow improvement, they used tools like HighRadius, which is able to predict exactly where there is going to be a delay in payment, right? Based on the sensitivity of the customer, and it created the dunning messages for the low-hanging payment delays. And for the higher end, right, it immediately able to escalate to the relevant people, so that the team is focusing on very sensitive or high cash flow rather than for the overall all the receivables. And thanks to that, they are able to reduce the DSO by more than 5 to 8 days, right? Similarly, using the other tools like Esker or again HighRadius, they're able to deal a lot of things which is relevant for example, say credit scoring, right? HighRadius is using the internal as well as external data to score their customers. So we all know that the credit scoring or the amount of credit as well as the days should be given on merit rather than judgment. But when it comes to the human, it becomes bias. So it goes on a rule, right? It fits across all. But with the AI tools coming into the picture, they're able to use the internal information of the volume, the transaction, as well as even the how many number of complaints and disputes, as well as the external data they're able to get from the financial statements, as well as if there is any credit rating agencies or even investment they got. They're able to get a dynamic credit rating for each and every customer, and which is changes from time to time, right? All these things brought into the better cash flow. Probably I will quickly skip. I will skip these two. Primarily what I'm trying to say here is, when using the AI, the tools, along with the proper fundamental data, it's able to show results within the time. And also they were able to give the board's requirement of the real-time dashboards, the far higher accuracy using some of these tools. What I would say, probably a quick word to the leaders, is primarily, fix the data first, right? I think that is, especially when I say with data, primarily we're still dealing with a lot of paper-based, audit trail, right? I think if we really want to talk any of these things, we need to really go beyond the paper-based audit trail to the complete digital, and that should be the first step. And very importantly, align your metrics or what you want to pick up the fight which is aligned with the board, right? I think what they want to say, and deliver quick wins. I think board will talk about lot about long-term strategy, but they will really go impatient if you're not able to show some result in a couple of quarters. So with that, I stop this one. This is my QR code for LinkedIn. If you have any queries related to AA or any GCC, more than happy to answer. Thank you.
Thank you, C.A. Shankar. So, any queries from the audience?
I have just two questions, one for Mr. Shankar and one for Mr. Suresh. I'll start with Mr. Suresh. How does one decide which model to select when it comes to the GCC model, whether they have to go with a cost-based or the different models, and how do they do their decision making when it comes to that? And my question to Mr. Shankara is on the tools that the different people use, because there are so many tools which are coming up. How does one keep track, and how do you keep following on the different tools that you need to use for a business? And then once you already deploy in one tool, some other tool is coming better than that. So how do you keep innovating and going on to the next tools? Because there is also a stickiness factor associated with each tool. Thank you, sir.
Thank you for the question. May I know your name, please?
Arun Balu.
Okay. So, in terms of GCC, which model we need to adopt, right? So, in this case, generally 80-20, if you see, 80% of the industries are using cost plus. So, I think that is the one of the model is been recommended by even all the consultant as well to adopt in terms of this thing. Because prior to this, I also worked in other industry. They also used a similar model, but it was a third-party customer where we used to third-party client where we used to support. But here in this captive, even in with my known network, where a couple of friends they are working on, other than one or two friends where are the industries, they are using the activity-based model. So predominantly, cost plus model will holds good in terms of, because always will be your P&L will be in the positive side, especially the GCC. Yeah, did I answer your question? Thank you.
Yeah, to answer the tools, yes, it's overwhelming, right? I think, which is I respect the question. So, especially what is the GCC of enterprise, definitely they will look at an enterprise-grade product, right? And what normally the CXOs look at is not whether it is a pointed tool, right? There are many pointed tools which is coming to the picture, but a large enterprise which always look at what is your product roadmap, because as an entity, right, as a CFO, they also have a roadmap of where the company has to go from the finance function perspective. So they always ask the product, right, whether what is their visibility or what is their vision of where the product is going to go. So they always align their objectives with the product roadmap. Wherever they see the match pretty close, they normally choose. Unless it is a mission critical, which is really important, then they go for a pointed tool. Otherwise, they normally go for a suite of tools which is covering a lot of their product, because talking between these tools itself is a big headache, right? Implementation, training, and other things. So that is where probably the Microsoft of the world is really doing good, because they have a complete suite of products and the stickiness is high. But yes, within selection also it's a complicated problem. There is no easy answer to it. But this is where I would say that as a large company, they normally look at their view as well as which is coming closer from the vision of the particular product. I hope I answered. And apart from that, the ROI and various other things, compliance and other things comes into the picture. But primarily, how do you choose between two sets of products is primarily, this is what they approach.
Trust a Zoho, or we can trust a Microsoft or Google, but a new startup, how do we trust?
No, absolutely bang on. I will tell my own experience. I don't want to name the client. When they introduced, they mentioned about earlier in a company called vSense, where we give analytics of customer behavior in large retail chains. So one of the CEO asked, "Hey, can you give your source code, because we don't believe you will exist," right? So that's how they behave. But the answer is definitely we didn't give, right? We are able to convince in various ways. But the answer is, or the anxiety is clear. Yes, people are saying that, "Hey, will you survey?" But you can answer in very different ways. That's what I will say. But the point is valid, yes.
Yes, sir. So I have two questions, and thank you, Suresh and Shankara sir, for, it's very hard to take the evening session, but thank you for making it interesting. So I have two questions. One is to Shankara sir, first one. So you had mentioned many AI tools here. So in one of the earlier sessions I had attended, I am given to understand that the data given to any AI platform is used for training itself. The model uses the data that we provide for training itself. So many of the clients mostly won't be comfortable with having their data become public. It's more or less public, no? So how do we handle that?
Okay, probably when you say how do you handle, you say that do we give the data or not, is the question?
Exactly, that's the question. So does the client has to agree to that, like the international client? Do they have to agree to it, or we just do it and give the results?
So many of the, probably, Suresh also can add to it, because he's a practitioner of it day in, day out. See, many of the tools, especially mature tools, they are now really grown far beyond without releasing upon no particular data, right? And they have a lot of opt-out options also, right? You don't want to do that. So if you have the GCC has a concern of not using the data, there is enough in ways you can really opt out. Suresh, you want to add any?
Just to add what Shankar said, internally what we used to do, it is also sometimes from global also we'll get a mandate. We do have a digital team inside Schneider. They will also come up with some tool, and we'll also meet a lot of people or industry like Mr. Shankar, whatever he is representing, right? Like that, we'll also get more knowledge about other tools also. Then we'll compare. They will have a comparison study of each tool, what is the pros and cons, and what is giving more efficiency in terms of cost-benefit analysis. Everything will be analyzed, then we'll take a call.
Okay, so as part of analysis, we also check if the data is going to be used, or like Shankar sir said, there is an option to opt out of giving it for training.
Yeah, and first point what he said is right. First fix your data. So that's the challenge comes in. Even we are facing, even right now, we have legacy of data right from 2010 also. We are taken as a project, we are taking some consultation help, and we are cleaning all those old legacy things.
Yeah, hope we answered.
Yes, sir. So I have a second question. So this is to Suresh sir, since he explained the models. So you can answer the question here, or maybe we can connect later also if you feel that this has to be handled separately. So there might be situations, especially in captive service centers, where the GST department contends that this is not export of service. So has it happened in your experience, and were you able to handle it? So you can answer right here, or we can connect separately, sir.
You nailed it actually. Even they're challenging our export also, export of services, especially from the legal entity what I am representing. There is crores of rupees is on stake now. We are also challenging.
Okay, sir. Okay, thanks.
So there are multiple cogs involved. This question is to Suresh. One is OPEX, one is a COX. So do you charge the same margin for both? Or because fraction is used, OPEX is used for commonly?
Yeah, so here to answer your question, ma'am, recently we moved from one location to another location where the previously we used to pay 55 rupees as a square feet rent. Now we are paying 70 rupees. You know, huge capex investment, around 227 crore we invested, and almost 86% of the square feet area we enhanced. So obviously, including OPEX, CAPEX, everything. So major chunk will come from the employee cost. This will be the other maintenance cost and all. It will be very lesser than 15, 20, 16%. That's it. Thank you.
Yeah, excuse me. One question. So I'm Alok Chaturvedi. I'm from State Bank of India and heading this business of South Bangalore. And very aptly this conclave organized, and we could take the stall here. So SBI is very closely associated with GCCs, and we are shortly going to open our GCC center next month, exclusively, first of its kind in India. And so far, my question is, like, how we are very closely associated with ICAI. So how bankers like SBI, we are already invested in GCCs, so how we can help and work together? What is the expectation from banks so that we can work together shaping the GCCs? Obviously, they don't need credit, many of them, but they need many of the regulatory compliances where they need banks.
No, SBI, actually we also deal with SBI. And,
or we can discuss later if you want.
We can discuss later on this.
But one addition I can say, just now SBI has onboarded almost 4,500 employees.
GCC,
only GCC employees. So we are working very deeply in this ecosystem, and we are in touch with KDEM and other government authorities who are actually helping GCCs in shaping their vision in here. So we can discuss later, but we have a lot to do.
This setup is in Bangalore or in Hyderabad?
Bangalore only, Bangalore. I'm only from Bangalore, and in this Indranagar, we are going to open a very big GCC center, exclusively only for GCCs.
Okay. Yeah. So we connect.
Due to shortage of time, can we take the questions offline? Yes. Yeah. Thank you. So I request moderator and treasurer of Bangalore branch of SIRC of ICI, C.A. Shripad sir, to give away the memento to the speakers of the session. Thank you, sir.